Hello, hello. Your Pretty Pennies with Tara Jones here. Thank you so much for joining me today. Hopefully you are having a wonderful day. As you come in, please make sure you share this out. Share this with other people. We are talking about how to pay off your mortgage in half the time using the 5 steps that I'm going to give you today. So make sure you share this out. Hey, the excellent sweet. What is your name again? I know we're in the same group on Facebook, but I can't remember your name. And I'm streaming live right now on Facebook and on Instagram. Just to let you know, for the rest of Debt-Free February, I'll be going live on Instagram as well. But usually I do all my trainings. Hey, Dominique, I use all my trainings on Facebook Live. But again, like I said, for the rest of Debt-Free February, as I was chatting last week, Friday, everybody was like, no, go live on Instagram as well. So I will be. And today we'll be talking about how to pay off your mortgage in half the time in 5 easy steps. So I know everybody either has a mortgage that they want to pay off or they're anticipating on buying a home in the future. So whether or not you have a mortgage right now, this is good, and this is good information, because if you are debt-free or if you want to become debt-free, but you know in the future you want to leverage your credit and leverage your credit scores to get a low interest mortgage, you definitely want to create a plan in order to pay that back off quickly. So that is why I'm going through this. So you do not necessarily have to have a mortgage right now in order to utilize this information. You can definitely create a plan before you even buy your first home or get into another home to make sure that you get back debt-free after you take out that mortgage, right? You pay that mortgage off very quickly to where you're debt-free again. Hey, everybody. Thank you so much for joining. If you could put your name and your financial goal. You already know I'm a financial success coach and a financial goal setting strategist, and I work based on financial goals. So I'm always curious to hear people's goals and their financial goals for this year. Hey, Natoya, can these steps be used to pay off any loans? Actually, Natoya, if you are just new around here or if you didn't notice, we are in the middle of Debt-Free February. And so I'm breaking down each debt like separately. So already here on the Facebook page, again, I'm streaming live on Facebook as well. Here on the Facebook page, I've already went over already went over auto loans, already went over medical bills, already went over personal loans and credit card debt, right? And so coming up this week, we have mortgage, we have student loans, we have debt and collections, repossessions, things like that. All right. So if you haven't, if you have something else, Natoya, I think that's how you say your name. If you have any other debt that you're trying to get information about, definitely check the videos after this one. Check the videos to see if we haven't talked about it. If we not have talked about it, we are talking about it the next couple of days. All right. So let's get into this. So the reason why you want to pay off a mortgage very quickly and not allow it to linger is because you don't want to pay the interest rate that you're currently anticipating on paying, right? You want to pay it off with less money and you want to become debt free. Like I was saying the last couple of weeks, whenever you are debt free, you can do more. You can have more money. You free up your money, right? A mortgage loan, typically the mortgage on your home, or even if you're renting and you're anticipating mortgage, your mortgage could be up to 25 to 30% of your income, right? Just imagine what you can do with an extra 30% of your income if you are in a home that's paid off and you don't have to pay rent, you don't have to pay a monthly payment for any type of housing, right? The only thing you're paying is utilities. That would be awesome. Great. Thank you so much for sharing with me your financial goals this year. I'm gonna go back and look at those and make sure for those that are trying to pay off debt, you hop on Facebook. If you're on Instagram, hop on over to Facebook and go search Your Pretty Pennies and make sure you get the rest of the Debt-Free February videos, because we've already talked about how to pay off auto loans, how to pay off medical debt, and all these other things, and we got more to come. All right. So yeah, just imagine what you can do by paying off a mortgage loan, paying off, instead of renting, getting into a mortgage loan, paying that mortgage loan off and do not have a monthly payment on rent or mortgage, right? That'd be amazing. That's, like I said, it's up to 30% of your income that can go back into your pocket, that can be invested in investments, in your business, in your family, whatever the case is, right? And also, You minimize the risk of foreclosure. Back in 2009, I was in college in 2009, but I felt the effects because I lost some scholarships. But when the market crashed, the housing market crashed as well, and a lot of people had their homes foreclosed on. Those who own their home and who are diligent about paying off their mortgage and diligent about becoming debt-free, guess what? They were untouched, right? They might have lost their job. They might have had some investments that went south, but guess what? Their home was untouched because they owned it, right? So you reduce your financial risk of somebody coming to snatch you about your house if you pay it off, right? If you pay it off quickly and as quickly as possible as you can, right? We never know what tomorrow holds. We never know what our financial ability will be tomorrow. So make sure you seize today and pay it off and become debt free. So therefore, if something happens tomorrow, you always have your home. It's never at risk of being taken away, because let's be clear, as long as you have a mortgage, you do not own your home. I know we call it home ownership when we have a mortgage, but it's truly not home ownership if somebody can come and foreclose on you. If the bank say, oh, or the mortgage company say, oh, you ain't pay your bill this month, or you ain't paid in 3 months, we coming to take your keys. That ain't your home, right? Just like an auto loan. I was saying that in the auto loan video. If somebody can come to you and say, hey, you ain't paid, I'm about to repossess your car, that's not your car, right? So you have to pay it off, get the title, and then you become the owner. Until then, you are borrowing, right? You are borrowing, and borrowers are slaves to the lender, right? That's biblical. So again, stay tuned. Even if this is not for you, as far as like you having to pay off a home mortgage, you could definitely use these 5 steps in the future when you plan on obtaining a mortgage and then using it to pay off, your mortgage very quickly. And the last thing that I want to say is, on average, most people get a 30-year conventional loan, right, for their mortgage. If you take 30 years to pay off a 30-year mortgage, you have paid for your house 3 times over, right? If you do the math and you let the interest accumulate and do not do what you need to do in order to pay it off quickly, your your mortgage loan could pay off 2 more houses of the same house that you just paid for. So if that doesn't give you more reason to pay off your mortgage loan or make a plan to pay off a future mortgage on your first home faster, I don't know what does. All right, so let's get into these steps. Step number 1, you already know what I'm going to say. I say it every time we start one of these Debt-Free February videos, is get your mindset right. You have to have the mindset in order to pay off thousands of dollars, right? Could you drop the Facebook link? If you just go to Facebook and you enter Your Pretty Pennies, like in the search bar, you'll find my Facebook page, all right? It's my Facebook like page. You can just type in Your Pretty Pennies and you'll find it. Get your mindset right. You have to have a winning attitude when you are trying to pay off a mortgage, right? Mortgage can be $100,000, $200,000, $300,000. And that's not a small amount of money to throw at, to make and then throw at a mortgage. It's going to be very tempting for you to kind of want to satisfy your day-to-day desires, your day-to-day, temptations. And so you have to have the mindset, which means you have to have a winning attitude and a winning mindset. You have to create your personal vision statement, and you have to create a financial plan that backs up this long-term debt repayment plan, right? And I have a video over on Facebook and also my website at yourprettypennies.com on how to make sure that you get into the mindset of paying off debt, right? We talk about that. So that is a video that we've already gone over in the debt-free series. So make sure that you have that video, watch that video before you start paying off some debt, all right? So number 2, this is getting into the meat of it. The first thing that you want to do is print off your amortization schedule. So when you bought your home, or if you do not still have it, it's probably still in your papers. If you don't look at it, you have an amortization schedule. And what that is it lists out all the payments that you owe, and it lists out what number they are, right? So, for example, if you have a 10-year mortgage, you have 120 payments until your home is paid off, right? If you have a 20-year mortgage, you have 240 payments. If you have a 30-year mortgage, you have 360 payments, right? So on your amortization schedule, it's going to be a list, right? And it's going to say how much the principal was, how much your interest that you're paying that month for that payment. So if you're on payment number 1, it'll tell you how much money of your monthly payment is going towards interest and how much is going towards principal, right? And so when you look at that and when you analyze that, realize that as you start at the top and you first get your mortgage, most of the payment that you're paying each month is going to go towards the interest. And then as you work your way down that amortization schedule, most of your monthly payment is going to go towards your principal than interest, right? And that is because each month your monthly interest rate is calculated once a month, not multiple times a month, once a month, and is based on the previous month's or it's based on that month's principal, like the balance that you have towards the principal, right? So, for example, if you pay $1,000 a month, let's keep these numbers simple, right? If your monthly payment is $1,000, at the beginning, your payment might be 500, or no, let's say 800 towards interest, and then 200 towards principal. And then as you get down to the bottom, because you started paying more on principal as you went down payment, as you went down the amortization schedule, and as you kept paying every year on your mortgage, your principal will start going down because you pay a little bit towards your mortgage each month, right? You pay a little bit of your principal toward in your mortgage payment each month. So as you go down, the interest rate starts getting lower, and the amount that goes towards your principal balance gets higher, right? So make sure when you look at your amortization schedule, just study that a little bit, all right? Let's see. I'm trying to make sure I don't miss anything in my notes. I don't want to give you all of the lingo. I was debating whether or not I was going to do all the lingo and make it all complicated, but I'm not. I'm just going to give you like the high points, the high key points, and make sure that you feel good and confident about paying off your mortgage, all right? So again, get that amortization schedule. That's going to be very key. You're going to see your payments listing down the left-hand side. Again, if you have a 30-year mortgage, it's going to be 360 payments. If you have a 20-year mortgage, it's going to be 240 payments. If you have a 10-year mortgage, it's going to be 120, all right? Number 3, notice that the interest amount is calculated based on the principal at the time it is recalculated. Now, this I have to state because oftentimes people will tell you one way to pay off your mortgage quickly is to break your monthly payment into like separate single, like bi-weekly payments, because then you pay less interest over time. That is false. Unlike a lot of different types of loans and different types of ways to calculate interest, the way most mortgages are calculated, they are calculated once a month, right? So if your payment is due on the 15th, and every 15th you get a new statement in the mail, it is calculated once a month. That principal balance is calculated once a month, and then your interest is based on that principal, right? So it's not like every day. Sometimes student loans and other loans are calculated daily. They're calculated weekly. They're calculated bi-weekly. A mortgage is not like that. So if you've ever heard, and I know a lot of people hear this and they ask me this all the time, should I break my monthly payment down into bi-weekly payments? You don't have to, because every month the most that you will have to pay towards your interest is the most that you will see on your amortization schedule. In our example of $1,000 monthly payment, for the month 1, no matter how much you pay on that payment, only $800 will go towards that monthly, will go towards interest, right? So if you pay $1,500 or if you pay $2,000, only $800 will go towards interest. The rest will go towards the principal. Then the next month, you can recalculate what payment you're on based on the principal balance, right? So if you put some extra money on your principal, you will drop down in payments and kind of go down a little bit, and your interest rate will also lower, right? But it's not based on whether or not you put more than one payment a month on your mortgage loan. It's based on how much was your principal the moment they recalculated for the new month, all right? I have to put that in there. Regardless of the payments, blah, blah, blah. I already did that. All right. So the whole goal of paying off your mortgage in half the time is, we already know, increasing your income, decreasing your expenses to put more money towards your monthly, towards your mortgage, right? Every month. And so just like in the other ones, we're going to have at least 2 payments we're sending in every month. Always pay your monthly payment, right? And you need to specify this ahead of time to your mortgage company to make sure that they do not try to start pushing out your next pay date, right? You want to keep your monthly payments, and every time you make a new payment, you want to pay just more principal only, right? Just principal only. If they start pushing out and say, oh, no, you paid your next bill already, no, I want to pay my mortgage payment every month. If it's $1,000, pay it every month. But then if you have some extra cash that you've earned, and we're going to go about talking about how to increase your income and decrease your expenses. If you have any extra payments that you've earned or any extra money that you've earned, you're going to send in a second payment, right? So our goal is to put at least 2 payments a month on our debt, right? One is going to be the standard monthly payment. We're never going to not pay that. And then the second one is going to be principal only payments, right? And just by default, whatever you don't pay towards interest that month is already calculated. It's not going to get recalculated. By default, whatever extra you pay will automatically go towards principal with the mortgage, right? So just make sure that they don't try to apply that to your next month's bill instead of allowing you to put that towards the principal. That's the only caveat with the mortgage loan, all right? Yeah, so step number 3. So that was step number 1 and 2. And step number 3 is create your monthly budget so you can calculate your disposable income and so you can make that extra monthly payment, right? So again, the goal here for Debt-Free February, if you want to start paying off your loans, start paying off your debt in half the time, you need to put at least 1 more extra payment a month on your debt. And that same thing goes for a mortgage. Put 1 extra payment on your debt at least, right? And again, there's nothing wrong with sending in more than 2 payments a month, but there's just no advantages when it comes to a mortgage, right? That's the myth buster that I have just talked about previously. Again, it's not going to make you overcome interest less or whatever the case is, or like make you pay it off faster if you break down your monthly payment. Again, that is a big myth that is not true, right? The only thing that cuts down your time and cuts down your interest is to make more principal payments. So when the next month monthly payment is calculated, there's less interest there. All right, that's the only way. Then number 4, increase your income so you can increase your disposable income and have more money to put towards your payment, right? To put towards that second payment. Again, this is going to speed up the process. When I was paying off over $60,000 in debt, I had an auto loan and I had 2 auto loans and a student loan, right? Paying off my monthly debt was really indicative of how much extra money I earned each month. That was literally the game changer, right? And so that's why I'm telling you, more than just trying to penny pinch and do all this other stuff and trying to finagle, the main thing you need to focus on over the next couple of months or years, however long you have left to pay off your mortgage, you have to get your income up, right? You have to monetize your talents, gifts, and your abilities. Like, what can you do? Can you get a second job? Can you help somebody? Create a PayPal account? Can you be a consultant for something? Can you babysit? Can you wash cars? Can you, whatever, house sit, walk dogs? I don't care what you do, but you have to get your income up very quickly. For me, what I did is I went to college for biology and finance. Although I was working at a major Fortune 500 company using my biology degree, I was sitting on my financial knowledge, right? So I started giving people budget reviews and analysis, right? I didn't create no big business. I didn't have a financial plan and goals and this and that. Literally, I just had a PayPal account and said, hey, told my friends and family, hey, I'm available to help you pay, help you create your monthly budget. Like, I have this experience. I'm doing this for myself. I've created these results. I can help you too. Here's my PayPal link to purchase. That was it. And I was making some money, and all that extra money literally went straight towards my debt. So that's the same thing you can do for your mortgage. And remember, this is not forever. This is just temporary until you pay off your mortgage. Once you pay off your mortgage or substantially pay it down, then you can go back to having only one job or, using that income. Because remember, once you pay off that mortgage, you're freeing up $800, $900, $1,000 plus a month, right? How fast can you expedite your business plan with that extra $1,000? How fast can you create your financial goals, your lifestyle goals, your travel goals, right? Your wardrobe goals. I don't know what your financial goals are, but how fast can you attain those by not having a mortgage payment or a rent payment, right? So that is why I encourage you, hurry up, expedite this. And by doing that, you have to increase your income. The 5th thing to do is to decrease your monthly expenses so you can further increase your disposable income. Again, like we talked about, your disposable income is your income minus the living expenses that you live off of, right? And including that your living expenses, I always include my living expenses because they're always necessity to me, is giving and saving. So giving, saving, living expenses like your rent, your utilities, your gas for the car, things like that. Everything, all that you have left over after all those are taken care of is your disposable income. And that's the amount of money that you want to have the most of if you want to start paying off your debt faster, especially your mortgage, right? So, and I'm not talking about, when I say decrease your expenses, we're not talking about going to your budget and cutting out caffeine and cutting out coupons and things like that. No, we're talking about those major expenses and habits you got. I already know, sis. You like to eat out every day. You like to dine out. You like to spend when you like to head into Target and allow Target to just sway you to where you want to go. You have 17 planners, right? Shopping habits. Those are the type of things that we want to look at. Those are the type of things that we want to identify and minimize, because the less that you have to pay out, the more you can use towards paying off debt. And again, like I said, the benefits of having no mortgage payment, no rent payments, because remember, if you own a home, you no longer pay mortgage if you completely own it. If you completely own it, you paid off your mortgage, it's yours, right? It's yours for the keeping. You have nothing else to pay. That is an extra 25% of your income that is freed up. Just imagine what you can do with that. And it's possible. It's absolutely possible. One thing I always tell my clients and the women that have already joined the financial reset already is that if you feel like it is impossible, if as you hear me talking, you're like, you know what, that don't apply to me. I don't think I would be able to do it. That's just too much. I don't have an income that big, or, I have too much going on right now with my finances. Go on YouTube and find somebody who has a very similar story and look at how many people have paid off their mortgages in 5 years or less, 7 years or less, with a smaller income than you, with more problems and more issues than you, right? It's called comparison bias. I think that's what it's called, where all of a sudden, like whenever we feel like we know something, we'll find ways to say that's the truth. This, try to back up what your thoughts are, right? So oftentimes when we see somebody around us and we hear somebody else's story, how they're like, your parents are still paying on a mortgage, or your grandparents never paid on a mortgage, or somebody got foreclosed on that, all of a sudden you think that that's the way that you automatically have to live. Like, you don't have to live in debt. You don't have to live with a mortgage over your head. You can absolutely temporarily sacrifice the things that you want right now and pay off your mortgage and have a mortgage-free life, but still a home that you own at 35, at 40, right? There are people right now on YouTube, on blogs, on websites that are sharing their story on how they did it. Like, if you don't think it's possible, go find something to back it up, right? Go find somebody else's story so you can change your mindset and say, oh man, I never thought that was possible, but I see it is. Just because it's not, the people around me have not done it, do not mean that it's not possible, right? So go ahead and get you some confirmation. That's what it's called, confirmation bias, right? Confirm the fact that it is possible. Anything that you want to set your mind to and you don't see any evidence around you, you're like, God, why did you give me this vision of being debt-free, but everybody around me is swimming in debt. Everybody around me is just faking it till they make it. Like, why are you trying to set me apart? Go find somebody else's story who's just like yours, including mine. But go find somebody else's stories to say, hey, yes, this is possible. Yes, I did pay off my home mortgage in 7 years. And again, even if you don't have a mortgage right now, definitely before you get in a mortgage, you need to be making a plan on how to pay it off. Because as you know, I'm all about leveraging your credit for a mortgage or a business loan or anything that's of appreciating value, not depreciating. So no auto loan, no personal loans, none of that. But yes, but make sure you have a plan to pay it off if you're going to get in debt, right? If you're going to get in debt, make sure you have a plan to pay off that debt so you get back out of debt very quickly. All right, so let me go over the steps of paying off your mortgage. Number one, get your mindset right. Again, you got a 30-year mortgage, a 20-year mortgage, even a 10-year mortgage. We're talking $100,000 or more. You know what I'm saying? Like, you're going to have to pay off a lot of money. There's going to be life that happens in between time, places you want to go, people you want to see, things you're going to want to do, concerts, trips, all these different things that's going to come up. You have to commit to being debt-free if you want to truly be debt-free and pay off your mortgage, right? So that's number one. Number two, create your amortization schedule or get it printed from your mortgage company, right? You can have them send you one, or go look in your mortgage files if you still have it and analyze it, right? Get to know it. Number three, realize how your interest is calculated. So again, it's not based on, and the reason why I put the step in there is because there's a lot of myths going around saying that you have to break up your monthly payment to pay it bi-weekly, and that's how you pay it off. That is absolutely not true. Your interest is calculated one time a month, not bi-weekly, not weekly, not daily, unlike student loans and some of those other loans. While those techniques may work for a student loan, it does not work for a mortgage loan, and that's a common mistake. So realize, just spend some time with your amortization schedule. I know it's so hard to say when you're trying to talk fast, but your amortization schedule, and understand what it means. Again, if you have a 30-year mortgage, you're going to have 360 payments. Realize that at the top, most of your payments, most of your monthly payments going towards interest. The less is going towards principal. As you get to the bottom, more goes towards principal, less goes to interest. So the more amount you pay in steps number 3, 4, and 5, create that monthly budget, increase your income, decrease your expenses. The more that you do, step 4 and 5, the quicker you'll get down that payment list. Like literally from 1 month, you can jump from payment number 42 to payment number 52 because you put some extra money on that principal throughout that month, right? So that is what I'm trying to encourage you to do, is jump down that payment schedule, your amortization schedule, aka your payment schedule, so that you can expedite when you pay off your mortgage, expedite being mortgage free, expedite freeing up 25, 35% of your income. I mean, y'all, like, just take a moment and think, what can I do if I have no rent and no mortgage payment? Because that's what I'm doing. My financial goal right now, I'm saving down a down payment on my first home, and I already have a plan to pay that thing off. I know how much I want my home to be. I know what area I want to live in. I know about how much I want my monthly mortgage to be. Of course, those things will vary a little bit, but I also have a game plan on how much money I will pay back in order to get my 15-year mortgage paid off very quickly, because I want my 15-year mortgage paid off in 7 or 6 at the most, right? And so I don't even have a mortgage yet. I haven't even, applied for my mortgage yet, and I already have a plan for it because I truly desire debt freedom, right? And even though I'm using my even though I'm using my credit score to qualify for a low interest mortgage, I'm still value debt freedom over my credit score, which means I still have a plan to get right back out of debt. Right now I'm debt free. I'm going to get in debt for a mortgage, and I'm getting right back out, right? So that is what I hope for you. That is what I wish for you. Thank you so much for joining me today. Definitely create a plan to either pay off your mortgage ASAP, or create a plan that if you're going to get a mortgage in the future, if you're thinking about home ownership in the next couple of years, that's one of your financial goals. Create a plan before you start applying for that mortgage, before you start doing all those things and get into the home ownership, to make sure that you keep debt freedom at the forefront of your mind, all right? All right, I'll talk to you guys soon. Take care.